Hello friends and welcome back. So in the last part we have seen the basic terminologies and types of trading also I have shown you. There are many different types of trading platforms that you need to know before you actually start trading. Okay, what are the options you have for the exchanges? So that all things we are going to cover in this part. Okay, also we are going to learn the basics of candlesticks and the body of and all those elements of candlestick today. Okay, so first basic question every student asks me is, sir, what are the options for me, or where can I buy, or where can I sell, or where can I trade cryptocurrencies? Okay, so these are the three options. Very well known platforms these are. Binance is there, Qcoin is there, Bybit is there. There are also many type of exchanges, almost thousands of exchanges you have in the cryptocurrencies. So these are one of the top exchanges. Always use the top exchanges for trading. Okay, so always remember. Recently FTX crashed, so you know that FTX debacle happened, so that was one of the leading exchange. So things like these can also happen with any exchange anytime, so it's always better to only keep your trading funds in these exchanges before you start trading. Okay, so always keep only the trading funds, so if the exchanges gets shut down, so you will only lose the trading funds, and don't keep your investments or savings or holding assets in your exchange platforms. Okay, so we'll be using this only for trading purpose. So Binance is a very good option, Qcoin, Bybit, and also you can have different types of exchanges, domestic exchanges also you have. So there are many exchanges in US, many exchanges in local exchanges we can say in UK. So in the domestic currencies also you will see many options. So like Kraken is there in Europe, Coinbase is there for US citizens. So like these many options you will have. These apart from those we have these options as global. Okay, so remember that you have to trade on these platforms. So within these platforms also you have different options and types of trading. So these are the platforms we can call it, and your style of trading depends on the platform you select for trading. Okay, so first option we have is spot trading. So this is general like cash market we have in the stock markets, right? And we can buy and sell there, and you cannot take leverage. They don't give you on the spot trading. Then there comes the leverage trading. So leverage trading, derivatives trading, all these types of trading are for the professional players. Okay, so people like me who are full-time into trading into cryptocurrencies, so we use leverage trading, we use futures, we use options. So different types of trading platforms we use. Okay, so as a beginner you only have to use spot trading for your trade when you start trading. Okay, remember this, and this is very important. Then in derivatives you have futures trading. So in futures trading you must have heard Binance futures is there, and other perpetual futures contracts are there, in which you get the leverage 2x, 5x, 10x, up to 100x leverage also you take. So these are very risky platforms, and you need to be careful before you actual trade on this in this derivatives market. Okay, so for beginners I don't recommend this. Then there are ETFs, which are also called leverage tokens. So Binance and all those exchanges have the ETF option also. So once you start the spot trading and explore further into your trading career, you will see all these platforms and exchanges that you will be using. So don't worry, first start with spot trading, and further you will explore it more, and depending on the style of trading you select, you need to keep changing your platforms. Okay, for the charts and layout purpose, whatever the charts we are going to see during this course, and also when you will actually move to trading, you need to use one platform, so which is called tradingview.com. link I'll be giving in the description, so you have to use that link. Okay, so tradingview.com is a very good option for charts. Here you won't take the buy and sell orders, you just have to use these platforms to view the charts of any asset. Okay, so all the global assets they have cryptocurrencies, stocks and forex, all these commodities and everything, you will get to see charts on this single platform, which is tradingview.com. Okay, so remember this. In the last part I showed you the types of charts we saw, right? Candlestick charts are there, line charts are there, bar charts are there. So no doubt you can always use the line chart, but to trade the market we need additional information. So that is why we use candlesticks chart type of charts. Okay, so this is on the screen is a single candlestick. So this is the bullish candlestick, that's why it is a green in color. Okay, candlestick gives us information about the psychology of the market. So what is the psychology of market? Means bulls are dominating the market or bears are dominating the market, and which direction the market is going. Is it going in the uptrend? Is it going in the downtrend? So all this information and all these are very important for trading. But the price always plays with our emotions and psychology in the market. So all this information is very important for us while we trade. Okay. So candlestick gives us information, that is the high price, low price, open price, close price. All this information is given by a single candle. Further we will see how exactly it is. Okay. It is always better than line charts. Okay. Rather than having a single line and just price moving, we need additional information while trading. So candlestick gives us that information. Who invented candlesticks? Candlesticks was invented 400 years ago by Japanese. Then Steve Nyson was the first person to bring the candlesticks to the US stock market, okay, to the Dow Jones. So since then everyone is using candlestick, and it is very it gives additional information also, and it is good for trading also. A single candlestick can change your perspective about market also every time you trade. Okay, that is why candlesticks are very important and we need to understand them. Now we will see one example how candlestick or price information plays with your emotional psychology and your emotions in the market. Okay, so let's go back to 60s or 70s or 80s, you can say. Imagine you are a farmer. Okay, now you have harvested your crops and you are taking all your grains to the market. So now you have loaded your truck and now you are moving to the market. When you reach the market, you see one board there. Okay, and it was written that today's rice, we can call it rice. So today's price for the rice was $25 per kg. Okay, then you say that this is a fair price and I am okay to sell at $25 per kg tomorrow when the market opens. Okay, then you meet a merchant there. He offers you $23 per kg. So you start thinking that the today's closing price was $25 and this person is offering me $23. So he is offering me $2 less than what I am expecting. Then you start leaving and ignoring him. Then the merchant calls you again and says that, don't you know today's open price was $20 per kg. So now this is one additional information with you. Okay, that today's open price was $20 per kg, the close price was $25 per kg, and whatever price this person is offering me, so $23 should be okay for me. And you agree with him and you say it's fine, $23 is okay, and now I'll unload my truck and hand over the commodity to you. Then you meet one friend there, and while discussing, he says that, don't you know today's highest price was $30. Now again you start thinking, man, today's $30 was the highest price and this man is just giving me $23, so which is very less, right? You again go to that merchant and you start fighting with him that you are offering very less price, I need to increase the price, and you take it at $25 or leave it. Then the merchant again gives you one additional information that, don't you know today's lowest price was $16 per kg. So now see the scenarios, how the price is playing with your psychology. Now you say that $16 is too low, man. Luckily I am getting $23, which is fine. So I think I should sell all my goods to him and just leave, because lowest price was $16. Imagine tomorrow if market opens much lower, below $16, if it opens, again I'll be in loss and I don't want to take this loss. So you offer him $23 and you just give all your material to him and you just leave. Okay, like this the market always plays with your psychology and your emotions. Okay, and all this information is given by candlestick. So candlesticks are always going to play a vital role in your trading, and these are very important. So when we will learn actual analysis, then that time you will come to know about these candlesticks and how important they are. Right now we are just learning the basics, and at this stage we have to understand what are the elements of this candlestick. So now I'll tell you what exactly are the elements of a single candlestick body and what are the parts of it. Okay, now on the left side you see a green candlestick, on the right side you see a red candlestick. So green candlestick, we can say it is a bullish candlestick, and red candlestick is always a bearish candlestick. So this is the first important part. Then you see a green color structure here. So this is called a body of a candlestick. Okay, So it might be green or it might be red, but whatever the solid body is there, it is called the body of a candlestick. Okay. Then there are these small lines at the top and at the bottom. So these are the wicks of the candlestick, W-I-C-K. These are the wicks of candlestick, or you can call them shadows. So this is the basic structure of any candlestick. Now what all information candlestick gives us? So candlestick gives us the high price, the low price, the open price and the close price. So these four important prices, all this information is given by a single candlestick. So for bullish candlestick it will be same. High price it will give you, the low price also information it will give you, the close price and the open price. The only difference you see here is the green candlestick, the open price for a green candlestick is at the bottom, okay, here, and the close price is above the open. See, you see the difference? Because a bullish candlestick, it starts here and it ends here because the price is moving up. So open price will always be at the lower side and close price will always be at the higher side of a candlestick. Same is the opposite for a bearish candlestick. In a bearish candlestick, the open price is above and the close price is below it. Okay, so it is vice versa for bullish and bearish candlestick. Remaining elements and remaining everything will remain same. Only the open price and close price are going to be different for a green and a red candlestick. So all these things are enough for at this moment, and further we will be learning types of candlesticks, what are different patterns of the candlestick, that also we are going to learn. So slowly now we are moving towards the technical analysis, and actual analysis we will start from there. Okay, so if you like the video, subscribe my channel and follow this course. See you in the next part. Take care. Bye bye.